This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices dipped in Asian trade on Monday as investors tread cautiously ahead of fresh economic data from top consumers the United States and China this week, though expected crude supply cuts from Saudi Arabia and Russia limited losses. Brent crude futures fell 55 cents, or 0.7%, to $77.92 a barrel by 0630 GMT, and U.S. West Texas Intermediate crude was at $73.31 a barrel, also down 55 cents, or 0.7%. Oil traders may be cautious ahead of the U.S. CPI and China's slew of economic data later this week, CMC Markets analyst Tina Tang said.
Oil markets in Asia are bracing for further growth in exports from Kuwait's newest Al Zour refinery as the complex started up its third and final crude distillation unit, CDU, this week, with trade sources saying the full impact was likely to be felt later in the third quarter as it ramps up operation. The refinery, which first started commercial operations in November 2022, is one of several major facilities globally bringing capacity online this year, with higher production and exports of oil products expected to weigh on refining margins. With Al Zour operational, Kuwait's exports of refined products, including fuel oil, diesel, jet fuel and naphtha, hit a monthly record high of 2.8 million metric tons in June, data from analytics firm Capella showed.
Moving on to the top news in the energy sector.
U.S. energy firms this week added oil and natural gas rigs for the first time in 10 weeks, due to the biggest weekly increase in gas rigs since October 2016, energy services firm Baker Hughes County said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, rose 6 to 680 in the week to July 7th. Despite this week's rig increase, Baker Hughes said the total count was still down 72 rigs, or 10%, below this time last year.
The U.S. presidential election could trigger a major energy shock if Republicans were to win and decide to halt hydrocarbon exports, Patrick Pouyanné, the chief executive of French oil major Total Energies, said on Saturday. The only thing that could happen, which is a major systemic risk, is that the Republicans decide to stop exporting. In fact, I am not even sure it would be gas, it could be oil one day, Pouyanné told a panel discussion when asked about any potential global supply risks. Americans base all their policies on the domestic price of gas or oil, they have resources, and if they feel that exports are driving their prices up, they block us. Next, we have the top news in metal markets. Indonesian officials are investigating whether there have been illegal nickel ore shipments to China, more than 3 years after Jakarta banned exports of the commodity, its mining minister said on Friday. Indonesia, the world's biggest nickel ore producer, had stopped exports of the material since the beginning of 2020 to reserve raw material supply for its domestic stainless steel and battery-grade nickel production. The policy had boosted the value of its nickel product exports to over $30 billion in 2022 from $1 billion in 2015, Indonesian government officials said.
New electric vehicles from Tesla and rivals are being engineered for efficiency in a way that cuts copper content, changes that could limit demand growth for the metal as the next generation of EVs hits the road, industry analysts say. The strong ramp-up in sales for EVs, led by growth in China, means copper demand will continue to grow for the remainder of the decade, but innovation in EVs has emerged as a limiting factor, according to 2 recent forecasts. Copper has been seen as a green energy transition play, in part because of the wiring needed for electric cars. EVs can use as much as 80 kgs, 176 pounds, of copper, 4 times the amount used in a typical combustion engine vehicle.
We will now look at the top news in the agricultural sector.
The Saudi Agricultural Development Fund has signed a number of contracts worth 926 million Saudi riyals with a number of companies to finance imports of soybeans, barley, and corn, the fund said in a statement on Sunday. Signing these contracts is part of the fund's efforts to support food security and compensate for any shortage that may happen in the commodities and agricultural supplies, the statement said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.